Question. The first auditor of a company will hold office. Options A. For a period of 1 year. Option B. Till holding of statutory meeting. Option C. Till the conclusion of first annual general meeting. Option D. Till a new auditor is appointed. Answer option C. Till the conclusion of first annual general meeting. The allotment of whole items of cost to cost centers or cost units is called. Options A. Cost allocation. Option B. Cost apportionment. Option C. Overhead absorption. Option D. Cost classification. Answer option A. Cost allocation. If an auditor does something wrongfully in the performance of his duties, resulting in financial loss to the company, he is guilty of options A. Negligence, option B. Misfeasance, option C. Criminal liability, option D. Contractual liability. Answer option B. Misfeasance. As an auditor, which of the following documents would you consider most reliable in respect of a receipt from a customer? Options A. Daily cash receipt statement. Option B. Copy acknowledgement sent to the customer. Option C. Bank statement. Option D. Counterfoils of the receipts issued to them. Answer option D. Counterfoils of the receipts issued to them. Next question. Under Company Act 1956, audit of financial statement is compulsory for options A. Private limited companies. Option B. Public limited companies. Option C. Companies listed on a stock exchange. Option D. All companies. Answer option D. All companies. Which of the following ratios indicates the short-term solvency of a firm? Options A. Profit to capital. Option B. Gross profit to sales. Option C. Current assets to current liabilities. Option D. Current assets to fixed assets. Answer option C. Current assets to current liabilities. Question. The term depletion used in relation to option A. Fixed assets. Option B. Wasting assets. Option C. Current assets. Option D. Tangible assets. Answer option B. Wasting assets. Question. Which of the following is correct? Option A. Assets is equal to equities. Option B. Asset equal to liabilities plus capital. Option C. Assets equal to owner's equity plus liabilities. Option D. All of the above. Answer option D. All of the above. Question. Which famous case deals with the insolvency of a partner? Options A. Garner vs. Murray. Option B. Royal British Bank vs. Imperial Bank. Option C. Solomon vs. Solomon and Company Limited. Option D. Daimler Company Limited vs. Continental Tire and Rubber Company Limited. Answer option A. Garner vs. Murray. Question. Super profit is options A. The average profit earned by the firm. Option B. The normal profit. Option C. The difference between average profit and normal profit. Option D. All of the above. Answer option C. The difference between average profit and normal profit.